Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And it's the start of a new and a brand new week. And given that it's a holiday shortened week, given that just Christmas is just around the corner and we barely have 6 to 7 trading sessions left before we start off with the new year, that's 2026. But yes, after last session's good rebound that we saw in the markets, we'll watch if the bulls can support the rally and bring cheer to the markets in today's trading session. But for now, the trends in the GIFT Nifty, that is indicating a strong positive start for our own markets. We have a good set of global cues to start off with. We did see that on the Friday, US markets saw a good session, marking their second consecutive winning streak. Given that investors have appreciated Oracle's joint venture with TikTok, so the stock did see about 6 to 7 jump, and as a result of which US stock markets also did well. Dow Jones jumped by about 180 points, Nasdaq and S&P 500, both of these indices also saw a bump up. But even this morning, US futures have been quite steady, and this comes on the back of Asian markets kickstarting the day on a positive note. Now, the People's Bank of China has kept their loan prime rates unchanged for the 7th consecutive time, and as a result of which Asian markets have been fairly stable. If you look at Japan's Nikkei 225, they have been soaring in the trade. However, Hang Seng has been off the highs, given that the China has kept lending rates unchanged for the 7th consecutive time. That is why there is a little bit of an enthusiasm which has got tapered on that front. But yes, apart from equities, precious metals, both gold and silver continue to shine. Silver hits record high, gold continues to gain. So good buying interest we are seeing in the precious metals, and we'll watch whether this rally is sustainable from this front, and we'll understand from the experts of how the outlook looks like from the precious metals going into the show as well. But yes, as much as our own markets is concerned, we have seen how the FIIs have turned buyers over the last couple of sessions, and a good rebound in rupee also we have been watching out. So hoping that this week also turns out to be a good one for the markets. Individual stock reactions will continue. We'll be watching out Shriram Finance, given that the shares will be in focus after a Japanese that marks the largest FDI investment in the financial sector as well. So yes, we'll be watching out how the shares react as well. We'll be also taking your stock related queries, so keep posting them on our live feed and we'll get to them shortly. But before we move on, let's take a quick check of the top headlines this hour. US futures are trading higher after Wall Street ends the week in the positive territory as the AI trade returns. The Dow Jones gains over 180 points while the Nasdaq surged over 300. Asian markets trade largely higher this morning as China keeps benchmark lending rates steady for the 7th time. Meanwhile, the GIFT Nifty is indicating a positive start for our own markets. Oil prices rise as the tensions between the US and Venezuela continue to escalate. US intercepts a third Venezuelan oil tanker after seizing another tanker over the weekend. Gold prices gain while silver hits another record high. Minutes of the RBI MPC meeting show that unanimous decision to cut rates by 25 basis points. Minutes also indicate that the unanimous recognition that the 2% average inflation gives space for another rate cut without any fear of overheating of the economy. And in the latest rejig of Sensex, Interglobe Aviation will officially enter the 30 stock index, replacing Tata Motors passenger vehicles from today. All right, in the last trading session, we did see that the Nifty snapped its 4-day losing streak on Friday. But still, for the week, Nifty did end the week down by about 0.3%. But yes, it's a holiday-thinned global trade, and that is why that is expected to keep the volumes quite subdued going into the trading session. But yes, this week, multiple factors will drive the markets ahead. First, the BSE index rejig will kick in from today. We'll be watching out Interglobe Aviation entering the Sensex, while Tata Motors passenger vehicles will be exiting post its demerger. The broader BSE 500 will also be seeing a significant reshuffle, with about 32 stocks added and an equal number of excluded as part of its semi-annual reconstitution. But yes, positive news coming in from the flows front, where FII's activity is expected to remain light amid the Christmas holiday week. even though foreign investors have turned net buyers over the last 3 sessions and they've bought nearly 1800 crore rupees in the previous session itself. But apart from the secondary markets, the primary markets are expected to remain busy. We'll be seeing 11 IPOs slated to hit the street, and they plan to raise about 750 crore rupees this week. One particular mainboard IPO issue will be that Gujarat Kidney and Super Speciality, and we'll be watching out for SME pipeline as well, given that we have a packed SME pipeline going into the week and 5 listings scheduled during this week itself. But yes, coming to the cash flows position, like I was talking about, FIIs have been turned net buyers from the past 3 consecutive sessions. Yes, in the last session, they bought stocks which was worth about 2,300 crore rupees in the cash markets, and DIIs continue to be the net buyers, buying stocks which was worth about 5,200 crore rupees in the cash markets. Nifty put call ratio jumping to about 1.13 levels from 0.83 levels in the previous session, and the stock that continues to be a part of the F&O ban, that is your Samman Capital, and none of the stocks have been added or removed as of now. But yes, let's take a quick check of how the pre-open rates look at now. Sensex is looking like it's up by about 200 points. Nifty is also heading for a positive start, because in the pre-open rates, it's looking like a positive start for the Nifty, about 89 points uptick that is coming in for the Nifty as of now. So yes, it's a positive start likely for the Nifty, and we'll be watching out whether or not Nifty can mount above that 26,100 odd levels in today's trading session, and whether or not the global cues remain positive for the overall market sentiment as well. But with on that note, let's quickly get on board with the technical expert of the show. Joining me is Rajesh Palviya at Axis Securities. Rajesh, good morning. I mean, Nifty snapped its 4-day losing streak last session, but once again, it was the 3rd straight week of declines. What can we expect this week? I mean, can we expect the Santa Bulls to bring some cheer?
Good morning, Lovisha. Yeah, so looks like, we will be having this pullback to continue further, and due to this Santa, we may witness a Santa rally here, and possible Nifty may attempt to cross and surpass about 26,000 level on a closing basis. So if that happen, I think we could see furthermore short covering action ahead of monthly expiry, and possible extension of rally towards 26,200, 250 we could see from here onwards. So as Nifty has already moved up from the recent low and almost took the support from its 50-day moving average support trajectory, and Nifty able to defend its upsloping channel trendline support area. So it looks like that, yes, if we continues to trade about 25,900, yes, there is a possibility of 26,150, 250 in the next couple of days. Again, on the Bank Nifty also, here also we have witnessed that, Bank Nifty also managed to, close around 59,000 level in the previous week. And looking at the participation from the large cap banking basket, we believe here also we could see some momentum to extend, and 59,400, 500 would be the next level for Bank Nifty also in the continuation of this pullback. Till Bank Nifty is managing to hold above 58,800, I think one should remain on the long side of trade, and possible extension of rally we may see. Even in the previous day, we have seen, broader market was also, trying to recover. So I think it would be very interesting to see how mid cap, small cap space behave in line with this global cues. And I think there could be a positive opening for broader market also, and we could see some follow-up buying action during the day.
Okay, all right. That's the view coming in from the overall markets front. But yes, Rajesh, what about the auto sector? I mean, it was one of the top sectoral performers in the last session. Do you expect the trend to continue, and what are you liking from the space?
So I think Nifty Auto itself in a bullish trajectory, and most of the auto stocks are also showing sign of strength. So we believe that, yes, we could see furthermore, upward momentum in the auto stock. Maybe some of the stocks may show some brief consolidation, but overall structure is bullish, and we do believe, yes, auto basket one can focus on in this market, as overall structure for two-wheeler space, four-wheeler space are in the positive trajectory. So I think Ashok Leyland, one stock where we are bullish, and continuity of uptrend is there. Stock is almost trading near to its all-time high trajectory. So I think this stock may extend its gain. 185, 190 would be the next target. On the downside, 165 needs to keep as a stop loss. Eicher Motor is also trading about 20-day moving average. Here also we could see new all-time high very soon. So Eicher Motor is another stock where one can focus, and Maruti is also moving in uptrend. So I think most of the auto stocks are showing a sign of strength, so one can remain on the long side of trade with the auto basket.
Okay, all right. That's the view coming in for the auto sector. We'll watch out whether the Nifty Auto extends the gaining streak to the second consecutive day. But let's touch base on realty stocks as well, because Nifty Realty has been doing well from the past two sessions. Rajesh, how are you placed on the realty space? Can we see a little bit of a catch-up rally? Because the index has remained fairly subdued over the past couple of sessions.
So some pullback action was there in the last week itself, and some of the real estate stocks have tried to show some recovery from the lower level. So if I analyze from the basket, I think if I go with the pure technical structure, Phoenix Limited is looking very attractive. The way stock managed to give breakout on the weekly as well as on the daily chart, Phoenix Limited can extend its gain, and possible rally towards 1875, 1900 we may see in the short period of time. So buy and accumulate is the strategy for this counter with the stop loss of 1790. Overall Realty also took the support from its multiple multi-week support area on the weekly chart. Looking at the structure, I think 1600 is important support for overall Realty in this juncture. And if it continues to trade above these level, I think some pullback action towards 1750, 1800 we may see in the near term perspective. So some recovery would be there in real estate space, be it the DLF or Prestige. All these stocks are attempting to give recovery, but technically Phoenix Limited and Overall Realties are well placed to take a trade for near term to short term.
Okay, got it. What about the IT sector? Because we have seen that, past three consecutive sessions, you've seen a good buying interest. Can we expect the rally to extend from here on?
So IT was, in a consolidation after a rally. But looking at the overall basket, we believe that, yes, some of the mid-cap IT stocks can extend its gain. Stock like Persistent, stock like KPIT Tech have shown good buying interest. But from the large cap space, I think one can focus on Tech Mahindra as well as TCS. These two stocks are looking promising from the large cap IT basket. So yes, some recovery would be there, as already near-term structure has already turned positive for IT stocks. So I think we may see extension of rally for IT sector also. So one can focus on TCS, Tech Mahindra, and Persistent System and KPIT Tech from the mid-cap IT stocks.
Okay, all right. That's the view from the IT sector, and we'll watch out how Nifty IT also behaves in today's trading session. But the first trades coming on your screen, where Nifty has opened above that 26,000 mark, 2650. That is where Nifty is at. 89 points uptick coming in for the benchmark index with about 0.3% gains. Sensex was also opened with gains of about nearly over 250 points. 0.3% gain coming in for the Sensex as well. Bank Nifty with about 160 points gain. A Nifty mid-cap index is also opened with about 100 points gain. So all in all, it's a positive start for the markets, because if you look at the broader end of the markets, they're seeing a good participation in today's trading session as well. But yes, coming to the sectoral front of how we are faring today, like we were talking about earlier with regard to Nifty IT index, it has extended its winning streak to about the fourth consecutive session. We are seeing about 0.8% gain coming in for the Nifty IT index. Nifty Auto index has been also quite doing well. Second days of consecutive gain. 0.2% gains coming in for the Nifty Auto Index. So all in all of the sectoral indices have opened in the positive territory, be it your realty, metals, pharma, all of them are seeing good buying interest in this holiday shortened week. But yes, coming to the top gainers and losers of the Nifty 50, Shriram Finance on the back of Japan's Mitsubishi picking up 20% stake, and of course brokerages giving out a bullish rating on the counter. On the back of that, we can see Shriram Finance topping the list with about 2% gains. Hindalco with about 1% gains. Tech Mahindra, IT stocks once again dominating the Nifty 50 gainers list. So you can see Tech Mahindra, TCS, both of them seeing a gain of about 1% each. Wipro, Infosys also seeing a gain of about 1 to 2%. Geo Financial, one of the other gainers on the Nifty 50 with about 0.5% gains. Tata Steel also seeing some buying traction. Grasim, Tech Mahindra, some of the other gainers on the Nifty 50. But yes, on the losing end, you can see Asian Paints, one of the top losers with about 0.2% decline. SBI Life Insurance with about 0.2% decline, Bajaj Finance, Max Healthcare, Cipla, some of the other losers as well. Interglobe Aviation, given that it will be entering BSE Sensex today itself in the 30 stock exchange, but you can see Interglobe Aviation once again, on the losing spree with about 0.4% decline. M&M also seeing a decline of about 0.3%. Power Grid also seeing a decline of about 0.2%. But yes, the stock of the focus remains today. That is your Shriram Finance. Given that Japan's Mitsubishi has picked up about 20% stake in the company, the deal has been valued at about 39,600 crore rupees via the preferential allotment of shares, and this marks the largest FDI investment in India's financial sector. As a result of which, brokerages have also retained their bullish call on Shriram Finance. They have raised their target prices on the counter, saying that the deal will bring huge upswing in the growth outlook. For instance, Nomura has raised the target price to about 1140, and they've lifted the FY28 ORM growth to about 20% from 17%. Similarly, Jefferies has said that this deal can improve credit ratings upgrade for the NBFC giant. Rajesh, coming to you, I mean, already a good performer this year. What's the next target level you're watching out for? Because brokerages have so far remained quite bullish on the counter.
So Shriram Finance manages to give breakout, very strong breakout, and looking at the breakout in the recent past, I think if it continues to trade above 900 mark, I think really can extend further as banking and NBFC space is showing sign of strength. So I think Shriram Finance is likely to remain on the outperforming side of this basket, and maybe we could see towards 950, 960 next target in the continuation of this up move. So I think one can trail the stop loss towards 900 and hold the position. We could see really to extend its gain in the near term also.
Okay, all right. That's the view for Shriram Finance. Right now trading with about 2% gain, so to say. But yes, let's move on and talk about Tata Steel, because that is also one of the top Nifty gainers. It's trading with gains of about 1%, and we did see that the company has said that it will be infusing about 1,000 crore rupees into its wholly owned foreign subsidiary, that is your T Steel Holdings. Now the stock, however, that has been down by about 8% from October highs. But Rajesh, what would you watch out next? Because metals have been quite buoyant, and Tata Steel also today has been trading with about 1% gains.
I think metals are still in a bullish trajectory, though there was some corrective move in Tata Steel in the last couple of weeks. But looking at the overall structure for Tata Steel, I think till this stock is holding above 165 mark, long-term trend is likely to exhibit on the bullish side. So till stock not breaking below 165, trend is on the bullish side. So buy and accumulate would be the strategy. On the higher side, 175, 176 are the key challenging level or supply zone for the counter. Once these breakout happens, I think we could see some more rally to extend, and 185, 190 would be the next target for the counter. So hold the position at this juncture. 185 needs to keep as a stop loss for positional trader.
Okay, all right. That's the view coming in for Tata Steel. Now, let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Naveen. He's asking the view on Interglobe Aviation. What are the fresh entry levels? Rajesh, I mean, so far this month, the stock has seen about 30% decline, 13% decline. What can we watch out next? I mean, today it's, expected to be included in the 30 stock Sensex benchmark.
So a very strong recovery from the recent low, and looking at the recovery, I think now if its stocks continues to trade above 5100 mark, I think we could see further more extension of rally. 5250, 5300 would be the next target for Indigo. So I think hold the position with stop loss of 5100. We may see as overall long-term structure is bullish because of some news flow in recent past. Stock corrected, but overall long-term structure is still bullish. There is no dent on the long-term chart. So we could see recovery to extend. 5300, 5400 would be the next target.
All right, 5300 can be the next target for Interglobe Aviation with a stop loss of about 5100. All right, let's move on and talk about another viewer query. We have Naveen, who's been asking the view on JK Tyre shares at about 440, and he's asking whether or not to book profits or to continue at the particular price point. 440 is what the buying price has been for him, and right now the stock has been trading at about 483 odd rupees. Rajesh, what's your view on the counter? Because we did see that the stock hit a new high recently.
So JK Tire is in bullish trajectory. Series of higher top, higher bottom formation is taking place. The way stock has managed to give breakout of brief consolidation on daily, weekly time frame. I think if it continues to trade above 465, the next target we may see towards 500, 520 kind of zone also. So I think hold the position with stop loss of 465 as a positional stop loss.
Okay, all right. That's the viewer for JK Tires. We'll be watching out how that moves. We have another viewer query from Contech who's been asking the view on solar industries on how the outlook looks like for the short term. Rajesh, any views on the counter? I mean, because the stock has been consolidating for some time now.
So solar industry was in corrective mode since last couple of week, and in this process, stock has broken its near-term, short-term moving averages. So till stock is sustaining below to 20-day moving average, we could see some pressure to remain in this counter. 12,500 is the key level to watch for on the higher side. Once stock crosses about 12,500. I think then some recovery trade would play out, and then 1300, 13,000, 13,500 would be the next trajectory for the counter. At this juncture, some recovery is taking place from the oversold trajectory. Those who have bought at lower level can hold the position with stop loss of 11,900. That stop loss needs to follow as a strictly stop loss, because below 11,900 we could see further more profit taking to initiate.
Okay, all right. That's the view for solar industries. Right now, the stock has been trading with about negative bias, so to say. But let's move on with another viewer query. We have Satya, who's been asking the view on Apollo Microsystems. He is asking what is the view for a fresh entry level for the medium term perspective. Apollo Microsystems, what's your view on the particular counter, Rajesh? Because from October highs, the stock has been under significant pressure. What can we watch out next?
Some recovery is taking place from the recent low. This is third consecutive day where stock is making a higher high low formation. Stock is now negotiating with its 20-day moving average support resistance area. So any breakout about 252 could take stock further higher towards 265 also. So at this juncture, I would advise hold the position as there is a sign of recovery taking place. Keep your stop loss towards 242 to hold the position.
Okay, all right. That's the view for Apollo Microsystems. We'll be watching out how the stock behaves. We have another viewer query that is by Shweta Naidu, who's been asking the view on Jupiter Wagons because her buying price has been about 369 rupees and she is stuck in this from a very long time. So she's asking whether to sell on rise or is there any momentum which is expected on the counter. If you look at Jupiter Wagons today, the stock is seeing a good jump with about 8% gains. But Rajesh, what's your view? Because she's bought the stock at about 369, so she's still witnessing some loss. How does the near-term trend look like for the counter?
Some recovery is taking place. Stock is now holding about the 20-day moving average. Looking at the near-term behavior of the stock, I think 270 needs to watch out closely. If it's able to defend this level for next couple of days, some more extension of rally would be there towards 300, 305. Again, I would advise review the stock behavior in next couple of days. If it's moved towards 300 to 305, that is the supply zone. So that level needs to watch closely whether it's able to surpass those level or not. If it's not, then I think some profit taking may emerge around those level. So review around those level or try to book around 305.
Okay, all right, 305, she can book at the profits. All right, let's move on and talk about another viewer query. We have Geetu Sandesh who's been asking the view on Ashok Leyland and whether it's a good time to accumulate at this particular price point. Rajesh, what's your view on Ashok Leyland? Because the stock has been an outperformer for the sixth straight year now. So what can we expect next?
So a view is bullish for Ashok Leyland, and we believe that this momentum can extend further. As I told you that we are holding bullish view for automobile stocks, and this is the outperforming stock 185, 190. We are projecting near-term target for the counter, and I think if you have little longer horizon, could be around 220 would be the next target on the short to medium term perspective. So keep trailing your stop loss as overall strength is there, and we believe that this momentum can extend further.
Okay, right. The momentum can extend further for Ashok Leyland. Let's take another stock in focus. That is your rights, because the stock has been trading with about 1.5% gains. We did see that the company has signed an MOU with the government of Botswana to support the development and modernization of the country's railway and transport infrastructure, which is why the stock has been seeing some positive momentum. But Rajesh, if you look at the stock has been consolidating between that 250 to 220 odd levels. So can we expect this trend to continue?
Overall structure is still weak. Whole sector is in corrective mode. There is no as such substantial recovery we have witnessed in most of these stocks, railway related stocks. So rights is still trading around 20-day moving average support area. Though stock was in oversold trajectory, some recovery is taking place. But I think until the 240 levels not taken out by the counter, I think trend is remain under pressure only. My advice would be exit in rally as overall structure is still weak. So try to exit around 240 245 if you get opportunity around those level.
Okay, 240 to 245, those levels one can exit. All right, let's move on to our next viewer query. We have Shweta Naidu who's been asking the view on CG Power and on Dixon as well, whether or not which one is good to hold at the current level. So three stocks she's been asking about: CG Power, Transformers and Rectifiers, and Dixon Technologies. How do all of these stocks look on the charts, Rajesh, for you? And she's asking whether which one is good to hold at the current levels.
So technically speaking, CG Power is very strong across all time frame. Though stock is consolidating since last couple of months in narrow price range. Looking at the behavior for the counter, we believe that till stock is trading above 640, 630 zone, trend is likely to remain on the bullish side only. Any breakout above 720 can attract more buying interest, and then stock can extend its gain towards 800 to 840 also. So CG Power is looking attractive if I have to choose from Dixon or CG Power. So I will go with the CG Power only.
All right, CG Power looks good on the technical chart. So that's your answer, Shweta. Let's move on to our next viewer query then. We have Alex who's been asking the view on Crompton, whether it's a best level to hold for a long-term investment at this particular price point. Of course, this year the stock has been an underperformer and it has exhibited some negative trend. How would you see from a long-term perspective, Rajesh, for Crompton?
No, stock is in corrective mode, and looking at the monthly chart also, stock has broken its important support area of 270 also. So I think trend is still on the weaker side. How the quarterly performance gives some boost to the counter to recover from current level. But on a technical front though, its stock is in weak zone. If I analyze on the monthly weekly chart, stock is clearly moving in down sloping channel, so which is a sign of sustained supply pressure is taking place. Until the stock not crosses about 275 to 80 zone on a weekly or monthly closing basis, trend is likely to exhibit on the weaker side or bearish side. So my advice would be avoid.
Okay, avoid at the current juncture for Crompton. We'll watch out for this stock. All right, let's move on to our next viewer query. We have Janvi who's been asking the view on Power Grid and how this particular stock looks like on the current charts. Rajesh, coming to you, of course, the stock has been an underperformer and it has slid by about nearly 4% in the past 1 month. So, can we expect this negative trend to continue, or how would you look at it?
So stock has broken its falling trend line resistance area. So looking at the breakout on daily chart, if it stocks able to sustain about 260 zone for next couple of days, then some follow-up buying action we could see in this counter. And then 270 75 would be the next supply zone for the counter. So for near term trading perspective, 260 needs to follow as a stop loss. On the higher side, 270 75 again I would advise to book profit also, as short to medium term structure is still on the weaker side.
Okay, short to medium term structure is still on the weaker side for this particular counter. Let's talk about another stock in focus, that is your Varun Beverages. The stock is seeing a little bit of a buying traction today, 1% gains coming in for the counter, given that the board has already approved acquisition of 100% stake in its South Africa-based Tweedsa at an enterprise value of about 1100 crore rupees. Rajesh, what's your outlook on the counter? Because today the stock has seen a little bit of a buying interest, nearly a percent gains. And in the past 1 month also the stock has seen about 6% gains.
So, stock is trying to hold its 50-day moving average support area, though stock is in downtrend only series of lower top, lower bottom formation we have already seen on the weekly as well as on the daily chart. So, if stock has to reverse this trend, 500 is the key supply zone. Once stock crosses above 500 level on a weekly closing basis, then yes, this downtrend would turn on the bullish side, and then some recovery buying would be there. So at this juncture, 500 is the key supply zone. So if you bought at lower level, can hold with a strict stop loss of 465 around 500 zone, review it or try to book some profit also.
Okay, all right. That's the view coming in for the particular counter. All right, just one last question before we let you go, Rajesh. What are your top picks at this hour? Anything that you're liking in the markets?
So as we discuss, Phoenix Limited is a stock where we are focusing on the bullish side. Very strong buying action has been taken place, and that stock one can keep on their buying list. Possible target towards 1900, 1950 we could see. So Phoenix Limited is first stock where we are holding our view, bullish view. Another stock from the pharma space, that is Glenmark. Very strong breakout is taken place in this counter. Looking at the structure, we believe that Glenmark can extend its gain. Possible target towards 2040, 2060 for trading point of view. So Glenmark is also looking attractive for near-term trend. And third stock is Paytm. Here also we hold our bullish view, 1400 to 1420 we are projecting target. On the downside, 1330, 1320 needs to keep as a stop loss.
Okay, all right. Those are the two stocks that we need to watch out for. All right, with that, we have to let you go, Rajesh. But thank you so much for your time and connecting with us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. You can see Sensex soaring in the trade with about 500 points gain. Nifty also doing up quite well with about 160 points gains at above that 26,100 mark. So, of course, we were waiting whether or not Nifty can mount above that 26,100 levels. And so it has. And we can see that once again, it's seeing a gain of about more than 0.5% or so. But yes, coming to the other broader end of the markets, it's seeing good participation as of now. If you look at the mid-cap index, it's showing a gain of about 0.5%. Small caps also with about 0.5% gains. India VIX has, however, spiked up a little bit, 2%, but still remains at quite subdued levels of about 9. And if you look at from a sectoral perspective, all of the sectoral sectoral indices have been seeing a broad-based buying. Be it your IT stocks with about 1% gain, Nifty metals also showcasing a gain of about 1.5%. Realty index also doing well. Nifty auto also showcasing a gain of about nearly 0.5% itself. So all in all, it's a positive day for the markets, and whether or not it sustains in the second half of the trading session is something that we'll be watching out for. But with that, let's quickly move on to our next guest of the show. We have Anand K Rathi, co-founder of MIRA Money, joining us. Anand, good morning. I mean, we are nearly coming to an end of this year, and this year has fairly been a year of consolidation. So what factors are you watching out as we step into 2026?
Good morning. Thanks for having me. Yes, what we are actually looking for is all the efforts that the government has put in to put in more money in the hands of people, be it rate cuts, be it income tax cut, be it GST reforms. Will it actually translate to consumption, and will the consumption actually translate to earnings growth for a lot of companies that are a part of the exchange? So that is one of the trends that we are keenly watching out for. And I think the coming quarter, the current results of the coming this quarter will be soon out. If there is a semblance of growth, in my belief, we will see the market zooming up even faster going ahead into the next quarter.
Okay. Anand, we've seen a massive rally in the precious metals. Even silver yesterday has hit a record high. Gold continues to gain. Do you believe this move is sustainable, and will investors continue to favor gold over equities until we have a clear earnings visibility?
It's again a global trend, not just to do with India. I think the amount of purchases that are going on by the central bankers, especially into gold, and the view that the silver demand is a lot more than the supply, can push up the precious metal even further. But I don't know if this rally can continue at the same pace going forward. I'm of the view that it can stall at some point in time. We don't know where it will stall. We have seen it in the past that once things look okay geopolitically, once the demand comes in, if silver gets recycled very well, the stagnation in the silver price could last for many years, and we have seen it in the past. I don't know if we will see it in the future. So this rally can continue, but may stall very soon and can lead to poorer returns going forward. But in the near term, I definitely feel with dollar depreciating, more and more assets getting into precious metal, I think the rally can continue in the short to medium term also.
Okay. What about the FI trend? Because, we have seen that they've already pulled out $18 billion from the market. So, over the past three trading sessions, we've seen a bit of a reversal. But do you think that there could actually be a reversal in terms of flows as we move ahead into the next year?
Possibly. One of the things that FIs will be happy about if there's an earnings growth in India and the valuation being comfortable, plus the dollar being at 90, 91, 92, I think there could be some bit of a reversal. But the overhang of tariff on India, how it will affect, what if it goes bad instead of getting better? How will India react to, the situations like that? Is going to be on a lot of FIs' mind. So they will, even if they are very comfortable investing in India, they would be waiting for a lot more clarity before they come into India. So my view is that the trend will reverse at some point in time, but the bigger play is not INR or the growth opportunity that India offers. It's going to be more on how well India negotiates with the US on its tariffs.
Okay, yeah. What about the broad end of the markets? Because we've seen that small caps have seen quite a bit of a sell-off this year. Do you think the pain will continue in the small cap space?
I think the pain has just started for retail investors because a lot of stocks that they are holding, especially beyond the indexes, especially in the micro cap and a lot smaller than small caps, are starting to affect their portfolio significantly. I've had instances where we have seen while the indexes are down maybe a 0.5%, 1%, 2% in let's say large caps, a lot of the stocks are down 7% in the large cap itself. Same with the mid cap. Mid cap, the median fall is about 20-25% or so. So my view is that the pain will continue, and for the first time since October, we actually saw retail investors selling off their mid cap and small cap holdings, while domestic investors, which is institutions, which is mutual fund and insurance and PF guys, are actually buying, but retail investors have started selling their holdings because the pain is significant. 20-30% fall is not small by any means. So I think this can continue, and the visibility of earnings is also not there in small caps yet. Plus, the valuation continues to be high. So my view is that retail investors who have invested and are holding at some point in time will give up, and hence my belief is that the pain can be slightly more longer than what people are expecting it up to be.
Okay, got it. Anand, what about sectoral perspective? I mean, any sectors that you're watching out for in 2026 and of course after the September quarter earnings conclusion?
Yeah, so one of the things that we've been positive on, and I did mention here last time when I was here, is IT. It's a more of a contra play. I'm not saying India's IT revenues will shoot up significantly, but the valuation at which IT was available maybe in October, maybe in November, was a lot better for the growth it was offering. And I also see trends in companies' results where they're starting to win larger orders, which was missing for some time now. So I think that's one of the contra trends that can play out well in the next year, which is 2026. The other thing is, banking. I think there'll be a lot of shift towards, good banks that show positive credit growth, good banks which can show positive retail growth. I think there is going to be a certain amount of shift towards this as a segment. And at a certain point in time, if let's say FMCG companies start showing some bit of an earnings growth, they also can offer value. But at this point in time, my larger play is going to be around IT and of course banks.
Okay. How are you seeing the Shriram finances? We have seen that the Japanese company has made a proposed investment into Shriram Finance. So, and despite FIIs pulling out from the secondary markets, they have always they have reinforced faith into the financial institution, because not only Shriram Finance, but we have seen Yes Bank and other federal bank as well seeing some FII increase in stake. So, how are you reading into this?
It's a much needed investment. India needs FDI because the amount of money that we can generally flow in is limited, and we need good, solid, long-term money. We don't need money that comes in and goes off, in a year, couple of years. We don't need hot money. We need structurally long-term money, and one of the good things that is expected to happen going forward, which has been missing in action for some time now, is definitely FDI pushes, be it the recent investment by Japanese firm, or like you mentioned, a few other companies investing in Yes Bank. I think this is structurally a very good move. And for the kind of growth that India is offering, we need a lot more risk capital. And unfortunately, we don't generate enough risk capital at this point in time. So more and more FDIs will help us to propel the India's growth story even forward. So I think a lot more companies should come in. The government should propose this as an alternative, and ease up the reforms so that they can come in and set up their shops faster. So it's a good move, and I hope it continues going forward.
Okay. Anand, what about the IPOs? I mean, they have had a record-breaking year this year itself, despite the secondary market not showing enough bullish momentum. So how exciting is the IPO pipeline for you? Because in this week itself, we are seeing about 11 IPOs hitting D Street.
I'm happy that IPOs are going in, but I'm not really happy that way, because it actually sucks up the liquidity from the investors. And then my worry is, of course, I'm not saying any IPO is good or bad, but the trends of IPO, people getting into IPO for listing gains and then trying to exit after a certain point in time, is definitely not a trend that we want to advise for any of the investors, primarily because there are times when you will make good returns, but in the longer run, we have seen if you're going in for short-term investments, it doesn't really pay off well. And the other issue is India has limited capital, like I was mentioning earlier on. So if your limited capital that you have gets invested into a wrong company, it doesn't just affect you, but it also affects the rotation of money, right? That's one of the reasons why I believe SEBI should be a little more stricter when it comes to IPO. It should be a little more vigilant when it looks at the trends of IPOs and the kind of profits that they mention, because capital allocation is very key, and wrong allocation in IPOs can actually not just affect investors, but also the economy, because the growth of or the rotation of money gets affected.
Okay, got it. And we'll be watching out how this IPO pipeline pans out into the next year as well. Anand, just one last question before we let you go. I mean, Nifty has already hit about 26,300 this year itself as a record high. Any particular level that you're watching out for in the next year, because you remain quite bullish on the entire markets for 2026?
I am very bullish. I am of the belief that earnings growth will be to the tune of anywhere in the early double digit. So I think I would not be surprised to see Nifty at 30,000 by the end of next year, which is about 14-15% around those levels from here on. This could happen primarily because EPS will go for an upgrade. And the other thing that can happen is there is definitely going to be a bit of valuation re-rating for India in general. So even if India stays at historically average price earning multiple and EPS touches a certain 11-12% growth from here, I think 30,000 is quite possible by the end of the year, but that is more on the large cap side. But my belief is mid caps can offer some returns, but small cap could be in for pain for the next 6 months or so. So more bullish on large caps, less bullish on the other two segments, prima facie at this point in time.
Okay, all right. But 30,000, that's the target for you. All right, with that, we have to let you go, Anand. But thank you so much for your time, and we hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets. You can see Sensex is off its day's high, but still with about 500 points gain. Nifty is also showcasing a gain of about 168 points above that 26,135 odd levels. But yes, the broad-based buying comes in from the broader end of the markets too. If you look at the Nifty mid-cap and small-cap, both of them seeing a gain of about 0.5% each. All of the sectoral indices have been trading with about positive territory, and particularly the buying traction come in from Nifty IT and Metal Index, because both of them remain quite the top sectoral performers of the day so far. But yes, we'll watch out whether or not in the second half of the trading session, bulls continue to hold gains and Nifty sustains above that 26,100 odd levels. But so far as of now, the market breadth remains quite in the cheery mode. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand how the market is developed with our experts and also discuss the stocks that have grabbed the headline. Until then, signing off.